So traders, one thing I want to really share with you in this video, which is a very big mistake that I've made so many times, or I did for so long in my trading career, back when I started 16 years ago. And I really want to share something really important with you when it comes to stock market crashes and trading individual stocks. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so I want to preface this video. For the last few days, I've come up with videos and saying, listen, there's a bit of a warning sign that the market could start to pull back here. And so just be alert of that, because we're getting a lot of greediness and so on and so forth. So we could actually see a bit of a pullback soon in the markets. Now, not a full-blown crash, 30, 40, 50% crash. I've never said that once. So if you think I've said that, no. But the thing is this, is that even if we do get a bit of a pullback, I see more upside to come. Now, so I've been doing these S&P 500, these indices, all right? S&P 500, Nasdaq, Dow. I've been doing these indices videos based on that. And also, yesterday I did a video based on 4 different tech stocks. It was Amazon, it was Apple, it was Facebook, and also Microsoft. So I did a video based on that yesterday. And the one thing that someone said, John, hang on a minute. You're saying that there could be a pullback soon in the stock market, but now you're bullish on these stocks? What are you talking about? And this is something where I really want to share something with you. The S&P 500, the Dow Jones, is not a representation of what the individual stocks are doing. Just because the Dow Jones goes up doesn't mean every single stock goes up. So you think that, right? So your thoughts are, because you think, S&P up, that means all stocks are up. Or S&P down, all stocks are down. That is completely wrong. Because if you look at the individual stocks, just look at the facts, even in the Dow Jones, that just because the Dow Jones is up, like today, let's actually look at today. S&P is up 0.1%. Okay, well, let's actually go to the S&P 500. Oh, look at this here. Oh, look, there's plenty of stocks. There's plenty of stocks that actually had a big down day. Look at this here. WHR had a big down day, 5%. MAS had a big down day. Look at this here. That was actually down 3%. SHW had a big move down day. And so did APD and so on and so forth. And then we look at the other side. Let's actually do this here. Wrong one. That was actually the wrong one. Let's actually do that again, right? And so let's go change from S&P. I'm doing that wrong again. Let's try. It's the third time's a charm. Let's go again. All right. So there we go. Here, right? So down 8%, down 5%. You can see all individual stocks. And then if I sort it from the highest to lowest, look at this here. Other stocks are making big moves: 9%, 8%, 6%, 5%. But hang on a minute. The S&P only moved 0.18% today. The purpose of me saying this, guys, is do not make a decision to trade an individual stock based on what the S&P is doing, because all these individual stocks are doing something completely different than the S&P. Like APA is in the S&P 500, but APA has been getting killed for quite some time. It's been in a big downward trend. So trade. What you want to do, guys, is that you want to just because the S&P and the Dow and the Nasdaq are doing one thing or saying one thing doesn't mean the whole market is doing that. So if you're thinking S&P crash, all stocks are going to crash, no. S&P at all-time new highs, APA is still at all-time new lows, or not at all-time new lows, but actually I think it is. Maybe let's actually go to monthly charts. We're actually pretty much down there at all-time new lows on APA. I'm using APA as an example, guys, but you can see that they're all in their own. Some are in downtrends, some are in sideways movement, some are in bull markets. So do your analysis on individual stocks and make your decision based on what that individual stock is doing, not based on the overall S&P 500. The S&P 500 can take a 10% dive, and we can have many stocks go for a 10% run in the S&P 500. So please don't confuse the both. Traders, I've been getting a lot of questions about asking me about, John, how do I trade the markets? What sort of system do I use? What's my approach, and so on and so forth. So I'm running a free masterclass teaching you my #1 trading system for the last 15 years. This is the most powerful and highest probability system on the planet. And I'm going to just share with you all the details. Plus, I'm going to share with you how I find and scan and do all my trading in 1 hour or less per day. If you go to johnsfreetraining.com, you can register for this free training that I'm going to run. So go to that right now. I'm going to teach you all the details, and I promise you, once you leave this free training, not only will we know exactly what goes into a good trader, so you could be a good trader, but also you're going to learn my #1 trading system, all the details, so you can start to crush it. So go to johnsfreetraining.com, and I look forward to seeing you on the masterclass. Go to johnsfreetraining.com right now.